here we go. We're gonna kick things off. As always, we try to keep this segment at about an hour. So we're gonna go round table here. We're gonna start with Bitcoin, Schmitcoin, then Josh, and then I'll bring up the rear here. So let me click things over.
Shout out to Riddy, real quick. Listening in the car, love it, love it. That's the dedication we need in this kind of
My man.
turbulent market.
There you go. Okay. There's that.
Isn't
There's
it interesting
that.
though?
There's Josh.
We go from completely dead, literally like deader than dead, industry's dead, to BlackRock ETF. Boom.
Boom. Yeah, it's like death to Euphoria overnight.
All it takes.
Well, application, right?
It was like the one thing that could actually turn the ship around, you know, like a wall of money with influence behind it, like changing the course of really regulation at the end of the day. That's what it's going to be. But anyway, go ahead.
Weren't they one of the larger investors in FTX?
BlackRock?
Yep.
I think they were actually.
I have that list somewhere. I should check.
Yeah.
Probably
rhetorical.
nothing.
They were on the list. I saw it. Anyway, all right, let's get started. So, oh god,
this isn't like DXY. Which coin is that?
This is Dixie Chicks. All right, so guys, this is the dollar index. If you follow any of my stuff, I always start off with the dollar index to break things down. Crash course on dollar index is a weighted average of the US dollar versus other world currencies. So why you care? Because if Dixie goes down, that generally means other things pull up and vice versa. This was the last macro bull market. I'm sorry, macro bear market for basically everything else.
Which was previewed by the cloud, by the way. Look at that. Look at that breakout. You do not want to see a weekly breakout on the DXY cloud. Sorry.
Yeah. And it's starting to do the same to the downside. But when I think it's literally the first episode we ever did of the Market Power Hour, I kind of laid out the scenario of what I thought could be possible, which was the dollar index bouncing like this. And I don't really see Bitcoin breaking out until this thing pops below this, which, you know, very well could. It's basically right at the high. Like it could break out now, I guess. But for me, this is a wait and see. I know everyone is very excited.
Hey, this is the first day of the rest of our lives. Okay, what do you mean wait and see? Come on, dude.
it is a day for the rest of your life. That's for sure. But we are the thing to really take away from here is that we're sitting on this zone here, and this has been support and resistance for ever, and the last 40 years, and we're still chilling here, and we're coming up on the monthly close in about a week. So if we could get a bearish engulfing on the Dixie, that'd be sick. A bearish engulfing close would really, really set us up for success on every other market, basically. I know, traditional, equities and stuff and metals, they're having a kind of a rough week right now, but all in all, like everything looks pretty good. But for me, like the really big check mark that I'm looking for is for Dixie to close some sort of bearish close. A bearish engulfing would be ideal, but even if it closed like somewhere down here, that'd be ideal. And the reason why, bust out my notebooks, I actually made notes because I'm a professional streamer that streams every 2 days, right?
2 years? What'd you say?
Every couple of days I do a regular stream.
So I'll say real quick before you get to BTC on DXY, it's just like YX77 in the chat mentioning the 2017, 2018 Bitcoin.
That's exactly what I keep thinking of too. Yeah, the bouncing ball. Yeah,
you get that descending triangle style.
Yes, yeah.
It's like lower high after lower high after lower high.
We actually did that twice. So
yeah, for bullish crypto, that's what you want to see though.
Right? Yeah. So it's inverse, right? So bearish Dixie is bullish crypto.
Right.
And for those who don't know what we're referencing, it's this deal and actually this as well. Okay, I'm going to talk about this here in a second. So let me break out my notes. So there's a lot of things going on the daily B bands that I think are worth talking about. The big thing is that there's been a series of head fakes. If you follow, B band strategy, head fakes look like this, where it do this bar, this I have this little streamer bar on Zoom and it's killing me. I'm like, I keep clicking it. I know you guys can't see it, but I'm clicking it and it's messing me up. But so a head fake is basically this, like it fakes a breakdown and then it bounces up, fakes a break up, and then it moves down. Did this like an infinite number of times. And right now what we're seeing is not a head fake, but a continuation setup where I mean, unless this thing just turbo nukes today, this is set up for a strong continuation. And so by the B band strategy, what a strong continuation looks like is a squeeze of the B bands, followed by an expansion of the bands, and then how the market kind of just like glues to the upper band. We saw this here as well. Very similar activity going on here. But what I'm really, really interested in is how the weekly and the monthly is going to close relative to the B bands and relative to levels. So when we zoom out, we talked about this ad nauseum basically to just fill the space. But over the last few market power hours, we talked about this throwback to the head and shoulders bottom neckline, right? This is the throwback here. And it looked pretty shitty going into, these little tests that were kind of grinding it out. And then we saw, the BlackRock ETF obviously propel the market and we see a big rally. But when we throw the B bands on there, it's important to note that, this is when we're talking like macro, like, in my opinion, these aren't the conditions I really want to see just yet. And what I really want to see is a weekly close on this upper band. We do have really good consolidation, the squeezing sort of fashion with the B bands. That's great. But if we're looking for real continuation, that's going to be marked in my book by a close on this upper B band. And that doesn't necessarily have to be like end of week has to close. It could be, green close today or, green close this week. Next week, it closes up there, whatever. That's fine. But if we do get a close up here, that's going to be really important because that's going to be a really strong continuation signal. And until that happens, which funny enough is going to coincide with a break of this Dixie support, no coincidence that this is here as Bitcoin is here. We're going to get double confirmation there. And if we can get that going, then that's ideal, right?
It's a bit early though, right?
What's up?
Relative to halving, it's a bit early time frame wise because we're 10 months out.
Yes.
Jack talks about this all the time with pre-halving year stuff.
Yeah, so that's one thing. So I know I just gave a bunch of bullish outlook, but I'm going to counter that real quick. So one thing that should be on everyone's watch list is this interaction with the monthly midline of the B bands.
Ooh, that's nice. I've never looked at that. That's really nice.
So when the market is above, it's objectively a bull market. When the market is below, it is objectively a bear market. And right now we're chilling right at the midline. And if we get a close above this midline, that would be screaming for continuation. And what that doesn't necessarily mean 2017 all over again, 2020 all over again. That's not what I'm saying. All I'm saying is that day to day, week to week, we're, possibly set up continuation. And what we target is this upper band. So like say we get a close above this midline here, we'd be looking for, this is obviously a dynamic target because it's moving, but we'd be looking to target this upper band, which would be, 50K, something like that. I know, Jack, you were talking something like that on your Twitter or something, right?
Yeah. I've got like 3 big reasons for that. Yeah, I'll go over that.
Yeah.
On my
but I do want to, of course, keep things objective so that we don't get bull blinders here.
Right.
There are a couple of things that are really concerning to me. Is this 3 pushes to a high type setup, which we see very often in the pre-halving time frame. So, oh God, this fucking bar, get out of here. How do I move this? Move. Okay, there we go. All right, so 3 pushes to a high. What that looks like is exactly what it sounds like. We got something like this, boom, boom, and then bam, right? So we see 1, 2, and then here's our third. And something that is usually accompanying this 3 pushes to a high price action is declining volume. And although everyone's very excited about this BlackRock news, we still have 4 days left on the weekly chart. So of course we got to remain objective here. It is this is very obviously declining. So to put things in a perspective here, like here was a prior 3 pushes to a high setup. This was in the 2018 bear market, or I'm sorry, 2019 like little bull market pre-halving
Yeah,
shenanigans.
which arguably is the closest thing to what we're doing like right now, like today. This right here.
Yeah, so we see one shove, we see two shoves, we see three shoves, and we see this climactic blow off, and then it went into all this choppy nonsense, and we see this big shakeout. I'm not saying all of this is, that's not a one size fits all, but what it does normally mean when we see these three pushes to a high is that, maybe we're in store for further consolidation. And so what I'll be looking for is I'll be looking to see how the daily handles any breach of this high. Things to keep an eye out on the daily closes. Well, if we breach this high, wicks and it closes below, that's a pretty big red flag. It could of course be rescued if it recloses above the high, of course. But just to, again, put things into perspective, here's the last time we were at this high, this all-time high. We saw this euphoric, this price action should look familiar, by the way, where we had, this drooping, abysmal, just really, demotivating price action that impulsively rallied, right? But it's rallying on very low volume. And when it breaches the prior high, it fizzles out and it just bleeds out. So anytime the market does this type of price action, we should always be watching for we should be asking ourselves, like, is it showing strength on the breakout? Because if it lacks conviction, that's going to be easily shit upon. So, I'm not saying that's going to happen.
That's a technical reference, by the way.
Yes, it's a technical. Don't worry about it, guys. Technical term. But if it does breach this high, and it does something like this, maybe we see a prolonged trading range. Like maybe this is actually, a trading range like this, where it does something like that, and we just consolidate until halving, and then bam, totally on the table.
Fair.
But really, the big takeaway is, if you have to summarize what my little spiel just now, we're looking at the B bands on the weekly and the monthly. How does it handle the monthly? Does it close above or below? If it closes above, cool. We'll be looking for the upper band. If on the daily we see this breach of the high and it closed below, watch this with skepticism. Wait for a close back above the high, because anything that lacks conviction where it should have obvious conviction is usually a trap, and we should just kind of be mindful of that. But yeah, let me see if I got anything else here. I got daily volume, blah blah blah. Oh yeah, so something else we should also keep an eye out is on the daily. On the weekly. The weekly RSI, we can see we're already starting to paint a bear div on the weekly. If we close anywhere near here, this is going to be a bearish divergence by RSI standards, which again is going to go hand in hand with this tapering volume, this three pushes to a high. All of these things sort of manifest around themselves whenever this happens. So, just further confirmation that, like, if we see hesitation here, we really don't want to see that. We want to see really strong continuation that does not hesitate here, because hesitation here is just asking to get collapsed on. But
yeah,
volume wise, I think one thing to keep in mind too is like who is buying and where are they buying? Are they buying on any of the US exchanges where the SEC has targeted? Probably not. They certainly could be buying on Coinbase, based on that BlackRock ETF filing. But I think it's also important to look at the CME volume, the GBTC volume, because that paints a much different picture. Obviously, the GBTC discount is a factor as well. But like so if you're an institutional player, you're probably going to be buying on CME rather than Coinbase.
That's very true. So to be fair, so it doesn't have this aggressive taper. That's for sure. But it is still, like, asking for the bear div to get painted. It's not outlandish, it's not breakout volume type stuff yet.
Right.
I would personally like to see a volume trend that expands, not remains flat. That is very reminiscent of something like this, where it's flat, not necessarily, overtly declining, but just all things to consider. Because again, we are running into resistance here. Just because we're seeing strong rallying here, that does not mean that this resistance can just be ignored. So
I like that bounce off the 20-week right there, your blue line. That's clean.
Yeah,
That's
super clean.
yeah, I
It's
like
a
that.
50 EMA, but yeah.
Hmm.
Yeah. Anyway, that's all I got.
One other thing to watch on the CME is the premium there, you know, forwardation, backwardation, whatever, however you want to think about it. There's currently a pretty wide premium on CME, which also hints at expectation of bullishness. You know, you wouldn't be buying at a premium if you didn't expect prices to go even higher.
Right.
Interesting.
Yeah.
One thing to watch there too is like historically, how wide does that premium get? Something we always used to watch back in the day were the OKEX futures, 1 week, 2 week, monthly, whatever, quarterly. Those premiums, discounts really helped sort of set the tone for, okay, you know, if this thing is like 15% blown out, it's like the inverse of GBTC, right? At some point, someone's going to start taking profit, right? If it's 50%,
Right.
30, whatever, at some point in the GBTC life cycle, when that discount got to 50, 60%, right? People started to step in. So it's the same way on the top, just for people who aren't sure, like,
Oh, GBTC actually just filled its gap. Look at that.
the
Look
hell
how
I mean.
clean. Look how clean that was. I just noticed that.
I have
Yeah,
a
Anyway.
looked at.
I have a bag of GBTC, so this has been a good day.
Anyway, that's it for me. Do I need to stop sharing or what do I do? Stop share. Boop.
I guess. All right, Mr. Josh, what you got? That was good, Schmitty.
Thanks.
I'm probably a little bit more bullish than Schmitty. How are the volume levels?
Like audio volume? Good.
Yeah.
You're good. I'm managing it on my side. I'm watching for spikes and stuff.
Okay. All right.
Yeah.
Sorry, too many windows. Let me take a look. Zoom. Share screen. Sorry. You see me there?
See it.
Okie doke. Well, you know, it's funny. We have TA, which is like not fundamental, right? It's just based on price action, based on volume. You know, we just went through it, right? All that. That's what I'd consider classically TA versus like news or fundamental nonsense. Leading into this, we had a potential for a bullish reversal pattern, right? It just so happens we had a news catalyst to help that play out. Before that, we had a head and shoulders that just so happens to get a news catalyst of the SEC going after Binance and Coinbase. So, look, all I'm saying is it helps to at least know a little bit about a little bit regarding TA, just in general, if you're on the fence on these sort of things, because it can help tip your hand on sentiment before these things happen, right? But like Schmitty said, we're still in the midst of breaking out, you know, potentially on the B bands, potentially on this falling wedge. This is as of a couple hours ago, so we're a little higher than this 29K level, but we still have targets on patterns, you know, that we've made for what, 6 months, 12 months, you know, like really realistically, we were in this inverted head and shoulder thing for almost a year. And that's with FTX, that's with all the nonsense, that's with SVB, that's with BTFP, that's with rates going to their highest level in 30, 40 years, right? And now we're just starting to come out of that with this throwback just beautifully playing out on that head and shoulders. So all that's just saying, like, look, we still have targets to hit here, right? Like, yes, we broke out, but on the inverted head and shoulders, there's a range from 31 to 35. On the falling wedge, there's a range from 35 to 37. We've got yearly pivots to consider here as well. Potentially a pivot to pivot move up to 38 and a half. We'll probably make some sort of consolidation in the mid 30s. There's decent resistance there as far as targets are concerned. So I still like higher highs. There's nothing in my mind that I'm seeing that's turbo bearish. We have trillions of dollars of capital potentially coming in. The BlackRock filing is just a formality that's going to get approved eventually. There's zero doubt in my mind. They have a surveillance sharing agreement. They have a custodian. They have all their ducks in a row. They wouldn't file if they didn't. So not only that, you're seeing all these other shops with trillions of dollars, Invesco, Wisdom Tree, they only have a couple billion, 80 billion, something like that. Anyway, everybody else is coming in because they know, like, okay, this makes sense. So it'll happen eventually. I'd caution people in some sort of buy the rumor, sell the news thing, right? Where people are like, consider this the rumor stage, right? Because people are buying with the expectation of capital flowing in eventually. Long term, I think this will be turbo bullish, but I would just caution people around that, you know, news event. If there's some sort of snag in the filing, if they delay it, right?
Or how about this? Because this would fit right into what you're saying. What if the top, whatever we go to, 40, 50, whatever the number is that we go to, what if that Pico top is ETF approved? Bam. And that's like the actual top.
It was in CME futures launch. It was in the previous futures ETFs cycle launch.
Yeah.
So,
yeah.
Like Schmitty, I agree. Like Jack, it's pre-having year. You know, keep your head on your shoulders. I wouldn't go buying Lambos just yet, but watch for just like we had news events into chart patterns, right? Watch for some sort of bearish divergence forming, rising wedge, head and shoulders, some sort of bear div into some sort of announcement, right? To have that catalyst to actually pull back. Where we're at right here, I think we got plenty of room to run. There's zero doubt in my mind. I think we're fine. It's just down the road. You know, we're only a couple days out of the filing, and it's also funny. We had a 3-day weekend again, and the last time we had like crazy moves where it was Martin Luther King Day, which was also a 3-day weekend on legacy side of things. I don't have any other commentary besides that, but it's just funny that that's how it lined up. So this is, you know, we have chart patterns on our side still pointing at higher targets, which is what we've talked about. Now the cloud is also on your side here on the daily, because we are above the cloud again. You know, much like the SVB candle, we dripped through the cloud, completed that falling wedge, whatever you want to call it, and boom, back above. So this is the kind of activity you want to see price-wise. For me, that's a confirmation. Like, okay, bullish sentiment is here, right? We may have bled for literally like 3 months. We were left for dead. We were bleeding on the side of the road. but now it's game on, right? Meat's back on the menu, 33K by July, all that stuff. Still above the 200, above the weekly 20 SMA, above the cloud. So this looks great. We don't have a bullish TK cross yet, but you could have front ran the cloud by just paying attention to the chart pattern stuff, like I said. And this is very different than anything below the 200-day, right? We don't have Fed just beginning to raise rates. We don't have Luna exploding. We don't have 3AC, Celsius, right? All this stuff exploding. We don't have FTX exploding. We have the opposite. We have birth. We have the birth of inflows of capital versus just nothing but death ahead of us. So opportunity and optimism for sure. Things look really good, trend-wise, definitely.
Side note, I think this might be the first time I've ever seen a falling wedge break up. Falling wedges like are notoriously terrible patterns. Yeah.
As far as odds go.
Nah. That's what people do. That's what people think. People think the wedges don't break like they should, but they usually do.
Well, crypto, that's like so debatey. You'll see altcoins do rising wedges break up and then tumble down, like and that'll mark its top and stuff like that.
Yeah, I agree. They're noisier than they are, maybe numbers wise. This is the weekly cloud, and again, this is just showing like, hey, look, people are shuffling to the parking lot, right? Look at the views on this stream. Look at the views on anything, anywhere, where you've watched a content creator, perhaps, or you know, anything, right? Engagement is still extremely low, and the crowd is not even close to being here. And maybe it won't be a retail crowd this time. Maybe it'll just be an institutional. Maybe engagement will just stay down. But not only are we early on price, but we're early on like the social metrics too, for sure. And on the weekly cloud, we're still below the cloud. We're not even through the weekly cloud. You know, we are like late 2015. We are 2019, right? Is what Schmitty already said. So we got plenty of time to bounce around to 42.5, back down to 30, right? And then when we're above the weekly cloud, sometime probably around halving or post halving, that would make the most sense. Halvings were what, here in 2016, here in 2020, right? No coincidence that the TA lines up with that as well. So as bullish as the news is, the price action, like I'm still like, yeah, we got plenty of room. target wise, like to keep going. Maybe not this week, right? But but over the next couple months, Q3 I think should be pretty good.
Oh, that's a nice chart.
This is the power law corridor. All these are on TradingView, by the way, for free if anybody wants to pull them up themselves. But this power law corridor, this was created by Capriol, I forget his first name, middle of 2018. So it's using the previous all-time highs to draw this trend channel effectively. And just as an oscillator telling me, okay, are we mega overbought? Are we mega oversold? Are we, lifting off the bottom? Are we grinding lows like we did in 2016, which looks like we're doing? And ideally, this goes slow. We don't want to see 1 week we're up 20, next week we're down 15, right? We don't want to see that.
I want a 2016 into 2017, that kind of like slow burn. Every little consolidation move was 100 days or more before it, like a little stair step up, and then another 100 days, on and on.
Lots of foreplay. Lots of foreplay. Just absolutely grind this out the longest we can, because that always produces the best result, right? Even post-COVID, like, I don't think sentiment was generally too bullish, other than the halving. We almost effectively went to zero. If BitMEX wouldn't have hit the circuit breaker, that's not really a circuit breaker, but if they wouldn't have done something there, we potentially, like, just based on derivatives, could have gone, like oil went negative, right? Derivatives could have just been nuts on that COVID candle. But
yeah,
anyway, things look good. The other thing on here is the 20-week moving average. We're also above that, so that looks really good from that perspective. Do
you have that as SMA or EMA?
I think it's SMA.
I was just curious. Both work really nice. I was just curious because I'm going to go back and play with this.
Yeah. I think it's just MA, but definitely not EMA. I like EMAs, but this is not an EMA. The other one, high time frame stuff, is the 2-year moving average multiplier. And again, oscillator relative to halving, I don't really need to say much. It does a really good job at just helping you decide, where are we at in the cycle? Are we early? Are we late? Are we in the middle? Are we at the median, middle, the white line here? What are the upside targets potentially? By the way, upside target for this is like something ridiculous, like 225 or something. Upside for this is 120.
That's it.
That's gonna keep moving. It's dynamic, like the B bands. If price continues to move up, it will move up. Something else that none of us have said yet is dominance. Bitcoin dominance just screaming, right? Nobody cares about your altcoin. Sorry.
That's my first chart I pulled up. Yeah. That's a great chart.
BlackRock didn't say, let's make a Solana ETF, right? So maybe that day will come, but it is not this day. So keep that in mind when you're thinking about, why isn't my alt moving? That's why. So yeah, that looks really good in general, right? We don't have any divs yet on RSI. Volume, this is an index rather, not Coinbase, but volume is still, it's at multi-week highs. So I like where it's at. I don't really have anything bad to say about this yet. I do agree with the 3 drives play, that's potential, but I would argue that this is the 3rd drive. I think that's basically what you said, Schmitty. Another like side thing to pay attention to is the inverse correlation we have right now with, just pulling another chart screen here. The inverse correlation we have with the S&P. What I was afraid of is that we would stay like sidelined while the S&P was moving up, and then when the S&P was pulling back, we would pull back with the S&P. So it's really good that that's not happening. Much like Bitcoin though, like this could very well make another high into this target. Let's say 45, whatever this 45, 46, right, on the S&P. And then finally, actually pull back to some reasonable level.
That makes a lot of sense. I like that.
Just like this all-time high bear div, you're probably not going to see a better example of that. Bitcoin had a really good one too in 2020, I think. But no one was bullish on the S&P. Nobody. Okay, there was like me, another TA guy who no one's gonna know. I'm not even gonna talk about. Maybe Jack was. I don't remember. But Like,
Yeah.
the technicals looked great for the S&P, and now everyone's like starting to think about piling in, right? So sentiment is flipping.
I was just say I didn't like it until we broke that downtrend and then retested it. And then the retest was an inverted head and shoulders. Like there was a bunch of boxes checked at that point, but like late September of 22, November, no shot was I like, oh yeah, we're done. That's it.
It's interesting that we are completely moving to the beat of our own drum, as we should be if, you know, BlackRock's actually coming in, right? One last thing I'll just look at is gold real quick, which also is just doing nothing, right? Gold just doesn't move in general. But I also saw this popular narrative that, you know, gold's going to move without Bitcoin, and people are going to choose gold over Bitcoin and all this other, like, this rhetoric. I mean, maybe that'll happen one day, but it is not anytime soon, I don't think, right?
BlackRock had to sell their gold longs so that they could free up some capital for Bitcoin.
Sure. I'll take it. But, you know, we're not seeing some like competing TradFi product take the attention. You're not seeing it. You know, there were other ETFs that have been launched in the same time frame over the past couple of days. You don't hear a word about those, right? No one cares. This is so again, all the attention, like Bloomberg, CNBC, institutional, everybody's talking about the Bitcoin ETF. I guess the last thing would be ETH, because I'm sure everybody wants to hear something about ETH. It looks okay, but it doesn't have a BlackRock ETF, right? So like, what else is there to say? This will move eventually. Like I said, once it's above 2K, maybe it's worth paying attention to. There's a massive chart pattern here, ascending triangle, Adam and Eve, common handle, like all this stuff says higher, right? But if you're really trying to min-max how to play this, you know, you might want to avoid this on ETH BTC. I don't really think it's going to 0.03, but I do think it's bearish for ETH relative to BTC, which is like duh. But I still see the meth heads like talking about ETH. It's like, guys, like, read the room. Now's not your time. Like, I get it. DeFi, you're gonna change the world, whatever. But it's just It's not today, you know. You're not that guy, pal, right?
Yeah. Well, it's like they forgot what happened in 2017 down to 2020. Like that was a massive pullback. That was a 90 on ETH BTC. And, you know, that was a 90% drop. But yeah, anyway,
that's all I got. So I'm super bullish BTC. ETH will catch up eventually. Watch the products that have a discount in the TradFi world, because that's the quickest analog to someone who wants to get into BlackRock adjacent products quickly, rather than waiting for BlackRock, right? That's all I got.
Copy that. Josh, you need to, this is your moment, okay? Lean into the 33K by July thing.
I'm trying not to force it because I don't want it to not happen.
No, it's your time. No, lean into it. You're going to be like trending on Twitter and Google and the whole thing. Like this is your moment. Just tweet just that little thing, 33K by July. And then everyone's going to lose their shit.
There was always the possibility, right? Because of the Head and Shoulders playing out.
Yeah.
But it's a much different case now than it was in originally like 2018 or something, right?
Dude, what if you were just 6 years too early?
Yeah.
Maybe. It's funny that it's persisted though. You know, I've certainly played a big role in that in the beginning, but it's just funny how it continues to live on.
People love that, man. Everybody kind of giggles. Well, it's like the exit all crypto market. There's like infamous one-liners that stick with people. They remember forever. All right, so let's go over some of my stuff here. I'm going to start off with Bitcoin dominance, because this is something that I've liked going over. So once upon a time, back on September 14th, 2021, I did a poll in one of my streams. I had, this was during like all the hype and Euphoria and stuff. So I had, I don't know, 500 people or something. And I did a poll where I asked, number one, are you more in favor of Ethereum or more in favor of Bitcoin, like going forward into the future 10 years from now? And overwhelmingly, it was like 90% of the then viewers were all in Ethereum. Like Ethereum was where they were ETH maxis, all that kind of stuff. And so then we had a subsequent discussion. It was like, where could Bitcoin dominance go? And we were looking at it. So back in September, we were somewhere back in here, right? And I asked what they thought, just as a, looking at support and resistance levels. This is an interesting level. And even if this later went up and broke and whatever, like this level caught my eye and I thought it was interesting. And everyone in chat flamed me. And there was multiple responses of not possible, not going to happen. That's crazy, leaving the stream, all this kind of stuff. And so I immortalized that moment by putting this up here. So we have a dominance level of 60% that chat says was not possible. And I think that's exactly where we're headed, just for no other reason than, to kind of thumb our noses at the retail traders. But I think that's where we're headed most likely. The things to keep in mind, like just with what's interesting here, we had this multi-year reversal level where there was this kind of like V reversal over and over and over until recently, where we sat there and consolidated. We had a failed breakdown, ultimately broke up. And what's very interesting to me is we're up to levels that we haven't seen since April of 2021. And there's really no sign of stopping here. This to me looks like an actual continuation, an actual trend, rather than some sort of like Jabady fake out where it all goes to zero and there's actually an alt season, haha, something like that. So the time for alts could be coming in the future, but for now, I think it's best to kind of stick to Bitcoin. And so this has been what I've tried to preach in my Sunday sermons, that I think it is the time for Bitcoin and not the time for alts. And like, just
would you say that's Wyckovian in nature, or am I just like seeing things?
I mean, there's an argument to be made. So Wyckoff is, and this is just like a quick little side note, Wyckoff is very simply 20 IQ, all about support and resistance. And it basically price trends down, it goes sideways and does some things. Typically it'll run the lows, or at least like grind the lows, and then spring up very quickly, consolidate, and off we go. And so something like this could be conceivably happening here. I'm very hesitant to say that there's like true accumulation or whatever going on in a dominance chart. So I kind of lean away from stuff like that. But I think there's an argument to be made for that for sure. But what's actually more interesting than like kind of this time frame is if we zoom out to say the weekly or even the monthly, and I just strip everything away, like just clear it all. This is kind of an interesting little Adam and Eve potential setup. And this is a macro view. This is like 7 years of price action. Does that mean that there's anything, should we take it serious? Up here is 70. So should we really be looking up at 70? I don't know, right? I'm not really ready to make something like that what I'm focused on for the foreseeable future. So for now, I just like let's just take it a step at a time kind of thing. I think this is kind of interesting right here.
I do like watching dominance though to help decide on alt rotation, right?
Yes.
Like, look at some random DeFi chart against BTC. That thing is crushing all-time lows right now. Like comp BTC is like always the first one I think of. I don't know why. Compound finance against BTC.
Yeah.
Or even against ETH, right? And there are people who want to jump in front of this and catch knives. And it's just like, why? Like, we get it. You love DeFi or whatever it is, right? An NFT. I don't care.
Right.
But like use some common sense here. I don't know.
Yeah, no, you're right. So that and I could pull all this up, but if for the sake of time, I'll skip and just say you're exactly right. Yeah, there's a ton of altcoins that are just destroying. Like there's this forever downtrend that we used to laugh about for Zcash and a lot of these kind of old coins, and it's like you're gonna see that in these new DeFi coins. So we'll say what we say to everybody who gets stuck in position. Welcome to the community, because you are now a community member. If you're one of those guys waiting for the next all-time high on the BTC pair, it's never going to come. So get used to it. Enjoy your bags. In my opinion, anyway. So Bitcoin, let's look at Bitcoin really quick, and I'll give you guys the 5-minute or less summary on why I think we're headed up to 47,500. And I'll do this as quickly as I can. But for me, my 2023 target, which I think we are on the road to. So I think this final thrust, this final impulse, if the 3 pushes to a high is to be believed, and I think it is. I think both Josh and Schmitty are wise to say keep your eyes on that, because it's a very common pattern across all markets. Then I believe we are on that third push, and I think we're headed up here. For 2 big reasons, and then I'll give you a third nice one. But the biggest one for me that I just think is so interesting is if I use our Fibonacci retrace and I turn off log, so we're back to linear. Okay, let's go back and let's take a look at 2018, 2017 high to the bear market low of 2018, and you can see that the market in the pre-halving year, which we are in right now, so back then 2020 was the next halving, so this is 2019. This period of time right here is 2019, and just like next year for us, 2024 is the halving, 2023 is the pre-halving year. But you can see we have our high to the market low and a rally back to the 61.8 retrace. This is a very common level that most every macro trader will keep their eye on. So that's interesting. Like, so that's, it's you know, when we're talking about setting up for a good trade or expectations for the future, I'm a big believer in having like multiple check boxes. And if you can check several of them in a row, and this is why these 3 points are important to me, because to me, it's like 3 check boxes. The first big one is that 61.8 retrace. Here's the next one. I know I can already hear Schmitty groan because he's not a big pivot fan. But I love yearly pivots.
Nothing against them. I just don't use them.
Yeah, that's fair. That's fair. So I'm a big fan of these pivots. So one thing that I noticed back, you know, in preparation for this particular bear market, I was kind of looking back at how price responded. And you can see that the pivot in just again, like the 20 IQ way of thinking of what a yearly pivot is, it's like the fair market value for whatever the asset is. And it's put on the chart on December 1st. So this is not curve fitted or adjusted as price goes on. So literally on January 1st, right here, this horizontal line came on. And then January 1st, the next year, this horizontal line came on. And what you can see from a very macro perspective is that the price cascaded, came back to this particular level, and then went on within the same calendar year and found support on the 2019 pivot. So it retested this level as resistance and then came down as support. So keep that image in mind as we move on to today's price action. So today being like current times. The last year's pivot, which was 2022, okay, is right at about this level. This is kind of where this conversation picks up, this 47,500. That's where this level is. Now, remember, the other thing we were doing is talking about the 61.8 retrace. And once again, if we look at the all-time high to the bear market low, boom, you can see that's another reason for this level right here. So that's 2 levels that have caught my eye, or 2 reasons for, you know, separate, independent ways of coming up with the same target, right? We have the 61.8, and then we have the coming back to retest the last year's pivot. And then the last thing that I think is just very interesting, it's not as strong a point, I think, as the first 2, is if whenever you look at a market, it's always really important to ask yourself, you know, where are the stops? Where are the liquidity levels? I know both Josh and Schmitty are always are talking about that when it comes to moves. And the macro is no different. Like, I know we've been focused on kind of liquidity levels and maybe in that region, or maybe with this move right here. But look at this move as a whole, this big macro move. So from the all-time high to the bear market bottom, there was not a lot of times where the bears got their stops blown out. So basically, if you had shorts rather, and you set your stops, you pretty much got away with a lot for a long time. All these levels have not been retested, you know, since these moments. So this level right here, which was kind of the Pico top of 2022, this is we watch this as a Wyckoff redistribution or a bear flag. Either one's kind of the same way to look at 2 different things. But to me, it would be very fitting to see these stops. So basically rinse all the shorts for everyone within this entire move. And to get rid of all those stops, you need to come back up and run this level. So again, this is, you know, when we're talking about what could happen and what would be interesting, this is an interesting level to me, really, because it blows out all the stops of anyone who was trading the trend up to a year ago and change. That does not mean we go on to make new all-time highs and the bull market is here. And I guarantee you that's what everyone will be talking about, right? That's going to be all the buzz. That's what you're going to hear on the socials, and, you know, all the paid groups are going to be like, oh, next stop, 100 grand, all that kind of stuff. But to me, it would make a lot more sense, just like what we talked about on the last pre-halving year, rather. So in the last pre-halving year, which was 2019, I think it makes a lot of sense to see a big impulsive move that sells off. So basically, everyone who was short gets blown out, and then everybody who's long gets blown out as well. So I want to see a retest of like 24K, and who knows what we get, right? That's just like, if I had to pick a target of where we end the year, that's probably where I'd put us. So a move like this to this, aside, like a similar move in today's times, would be a move to 50K and then all the way back to 25, before the actual bull run begins in 2024. All right, gents, any thoughts on that?
Yes.
Hit me. Yes.
Oh, I was just saying yes.
Yes is the thought. Got it.
No, sorry, I was muted. I was trying to find the unmute. The Zoom box is like so tiny.
Zoom.
No, I agree.
Zoom.
I like your rationale and your reasoning. I think it's important to have like levels that you're going to be trading around in mind ahead of time, because obviously when you get there, you're like, oh, right, we're going to go to 100K, just like when we were at 10K or whatever we got to for Bitcoin, right?
Right.
Whatever cycle. People are always like, oh, we're going to 4K, we're going to sub 1,000, whatever it is. So it's always important to have those just levels in mind based on math or something, right? Chicken bones, I don't care. Cloud charts, moon charts, whatever you want to do, right? But have something in mind, because when you get there, you want to have a preconceived decision like ready to go.
Yeah.
So yeah, I like those targets a lot, and it'll be interesting to see if we bear div into that stuff, based on momentum or RSI or whatever.
Schmitty, I don't think I told you this, or if I did, you may have forgotten, because it's been like 6 months now, Chad. I don't remember, but we had Bruce Fraser on, and right after the breakout, I mean, probably January still of 2023. So right after the breakout of this macro falling wedge, or whatever you want to call this. And back then, he was the one saying, so I was talking about 30K or 33K or something like that. I was basically running these highs. And I thought that would be an interesting 2023 like high, like the high of 2023. And he was the one who said, hey, based on his point and figure Wyckoff analysis, which had to do with basically everything, all the price action in this box, he was projecting 50K. And that's off like the X's and O's point and figure style. And this is a guy who's been around a long time. Chad, he's it's at RD Wyckoff. If you're looking for some underfollowed alpha, he's got less than 10,000 followers, and he nails moves constantly. But so I don't know, just interesting, worth sharing.
Yeah, I mean, I'd watch the dominance. I'd watch ETH BTC for levels that you have in mind. I'd watch the spot charts on ETH and BTC. I personally would just ignore alts other than that entirely until dominance is above 56, 60, pick a number. I would ignore ETH till it's above 2K. I know there's a lot of people. One guy in particular, Johnny Mo Trades on Twitter, who I am close with and talk to frequently, who's like hyper focused on ETH right now. It's like, guys, like, there's a party happening literally next door. Why are we focused on the nothing burger right now?
Right.
ETH will have its move. I guarantee you, it'll move. The meth heads are going to go nuts. But I'm just trying to help people here. That's all I'm trying to do.
Yeah, facts. And
yeah, I've never understood that mentality either. Because like, even if you are an Ether maximalist, the way to acquire more Ether is to trade the shit that's going up.
Yeah.
Like just trade it and then convert it back to, like, I don't know. It's never made any sense to me.
That's like I'm a Bitcoin maxi type guy, but I'm always looking at Doge and Ape and whatever. Like, if there's a trade, then there's a trade. Side note, this is Litecoin. Litecoin's halving's coming up in about 40 days. And this is Litecoin on the Bitcoin pair. And once again, another thing I just would not want to touch. We had the little failed breakout coming back and likely to continue down. So, Ethereum on the Bitcoin pair looks like garbage. Most of the DeFi coins look like garbage. Even Litecoin, which has this big exciting event, for the Litecoin focused people, Even this doesn't look like the thing to be all in on. So be careful out there.
Yeah, I would be denominating everything against Bitcoin or ETH. You know, pick one or look at both. There's plenty of reasons and rationale to trade around any of those other charts that aren't just like spot. But if you're sitting in alt still, I don't know. You know.
Hey, my advice would be just hold it till 2025, and I'm sure they'll have their day again in the future. And there you go, you can get out at break even or whatever. But don't trick yourself into don't fool yourself into thinking that's where you need to have all your capital, that kind of thing.
Like Link is another good one, right?
I know
there's a huge community at Ripple, right? Just pick one with a massive community. The Link chart doesn't look great either. So, you know, everybody thinks like, oh, it's happening for BTC. It's going to happen for me too.
No,
I mean, maybe, but I doubt it. I don't
know. What people don't remember is that the reason why those things had their time in the sun is because they were in price discovery. The moment you start coming back into prior levels, you have people that have been bag holding, looking at, like you're constantly going into the wind.
Yeah.
When you're in price discovery, you're going with the wind. And so all these people are bag holding like, oh, it'll come back. It's like not in the way you want it to, probably.
Yeah. Man, the Link Marines, that's a great example. They sat over a year of just 90 degrees to the right. Like it just drifted sideways. It was like between $6 and $8. And finally just it broke down here recently, sub $5. So any closing thoughts, guys? We have about 2 minutes and we got to wrap it up.
I don't think so. I think we hit on all the high points. I mean, Dixie's super important. S&P super important. I don't think they're going to lower rates anytime soon in Fed. So watch for that next month. The CPI out of the UK was a disaster, by the way. So it looks like they're going to keep raising longer than we are in the United States.
Sheesh.
Yeah, it's just going to strengthen the dollar.
What else? I don't know. Stay humble, stack sats.
I had an old timer tell me this was like a year and a half ago, back when the bear market was kind of just starting. He said his mantra is stay alive till 25, and I love that. So I've been using that a lot. So chat, just stay alive. Stay alive.
Your viewpoint is post halving will be bullish. Just don't blow up, right?
Yeah.
Take your time, touch grass, whatever you need to do.
Dude, if there's one piece of advice you can give, it's that. Don't blow up.
Don't blow up.
No, seriously, dude. Like, just stay alive long enough to see the promised land.
Yeah. And you'll outperform 90% of the people you're up against.
Yeah.
If you're just alive. Like if you're just on the game board still.
100%.
Crazy. All right, chat. Thank you for hanging out with us. Another segment of Market Power Hour. We'll get this up on YouTube and then we'll circulate it on Twitter. Make sure you guys are able to view it. Thank you guys. And big love to Schmitty and Josh for taking time out of their day. And guys, we will see you next time. Peace out.
All right. Be sure to get your pet spayed and neutered.